What is going on, everyone, and welcome back to Explain the Charts. Today is October 9th, 2025, and we are taking a deep dive into Tesla, ticker symbol Tesla. There's been a whirlwind of news lately, from cheaper new models to record deliveries, yet the stock has been selling off. In this video, we'll dissect all the latest headlines, correlate them with the price action on the charts, and identify the key levels you need to be watching right now. We'll look at the daily, hourly, and 15-minute charts to build a complete picture for both the short and long term. First, let's talk about the news, because it's been a classic by the rumor, sell the news scenario. Tesla officially launched its cheaper, standard range Model Y at just under $40,000 and a new Model 3 at about $37,000. On the surface, this sounds like great news to spur demand, but the market reacted negatively, with the stock falling solidly after the announcement. A big reason for this skepticism is the expiration of the $7,500 U.S. federal tax credit at the end of September. Without that credit, these new cheaper models are actually more expensive for U.S. buyers than the previous base models were just a couple of weeks ago. This has raised serious questions about whether these prices are low enough to truly boost demand or if they might just cannibalize sales of the more profitable premium models. This sell the news reaction also happened just last week. Tesla announced record Q3 deliveries, an objectively bullish metric, but the stock hit a 2025 high of over $470 that day and then immediately reversed lower. So we have two instances of positive fundamental news leading to immediate selling pressure. On the long-term bullish side, Tesla has started the wider rollout of its full self-driving version 14 software. Initial reactions are reportedly positive, but it will take weeks to gauge its real-world performance and impact. However, there are also some headwinds to consider, including an ongoing NHTSA probe into FSD and reported production halts for the Optimus robot. The broader market is still riding high on AI momentum and hopes of Fed rate cuts, but some analysts are warning of a frothy, speculative environment, which could add to volatility. Okay, with that context, let's pull up the charts and see how this all translates to the price. Here on the daily chart, we can see the bigger picture for Tesla over the past year and a half. After bottoming out in early 2025, the stock went on an incredible run, more than doubling in price. We saw a massive surge starting in late June 2025, pushing from around $200 all the way to a peak of $470 just last week on October 2nd. That peak is a critical level we'll come back to. The volume during this entire uptrend has been substantial, confirming strong institutional interest. Now let's zoom in on the action since September to get a clearer view of this recent top. You can see this parabolic move up throughout September, fueled by anticipation for the delivery numbers and the new model announcements. The candle on October 2nd is extremely telling. We see a huge wick to the upside where the price hit $470.75 before getting slammed back down to close at $436. This is a classic reversal candle right at a key news event, showing that sellers took firm control at that level. Following that, we had another sharp drop on October 7th, the day of the cheaper model announcement, falling from an open of $447 down to $433. This price action gives us some very clear levels to watch. The high of $470.75 is now our primary short-term resistance. Any bullish move will need to decisively break and hold above that level to regain momentum. To the downside, we are currently testing an immediate support zone around the $425 to $430 area. This is where the price has found buyers a few times in the last couple of days. If that level fails to hold, the next major support area is down near $416, which was a pivot point in late September. Beneath that, the psychological $400 mark is a huge level to watch. A break below 400 could signal a much deeper correction is underway. Let's switch over to the 1-hour chart to see the short-term trend more clearly. Here you can really see the steepness of the sell-off from the $470 peak. We are clearly in a short-term downtrend, characterized by a series of lower highs and lower lows. Notice how each attempted rally over the past week has been rejected at a lower level than the last. This indicates sellers are still in control on this time frame. The price is struggling to get back above the 440 to 445 zone, which is now acting as strong intraday resistance. Drilling down even further to the 15-minute chart, we can see the minute-by-minute battle. Yesterday's price action showed a lot of chop and indecision, bouncing between roughly 425 and 441. This coiling price action often precedes a larger move, so we're at a critical inflection point heading into today's session. A break below yesterday's low would be very bearish, while a break above yesterday's high could give bulls some short-term relief. So, to recap the key levels for Tesla, major resistance is at $470, with minor resistance around 445. Key support is being tested right now around 425, with stronger support zones at $416 and the major psychological level of $400. So, what are the likely scenarios from here? For the bullish case, we would need to see the price reclaim the $445 level with strong volume. This would suggest the sell the news reaction is over and buyers are stepping back in. If that happens, a retest of the $470 highs becomes very possible. I'd place about a 40% probability on this happening in the next week, and its likelihood would increase if we get overwhelmingly positive news on FSD adoption. The bearish case, which I see as slightly more likely in the immediate short term at around 60% probability, is that support at 425 fails. This would confirm the downtrend, likely leading to a drop towards 416 and potentially even a test of $400. This scenario is reinforced by the negative sentiment around margins and the lack of a clear new catalyst now that the announcements are out of the way. The key things to watch will be if buying volume steps up at these support levels and how the broader market performs. As always, please remember that this is not financial advice. This video is for educational and informational purposes only. You should always conduct your own research and due diligence before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.